Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today I am delighted to be joined all the way from Virginia by Dan Schleifer from Cosaic. How are you?
I'm good. Thank you for having me on the show.
It's wonderful to have you here. Thanks so much. And look, it sounds like it's been an exciting time for you in the business. We've all had our challenges over the course of 2020 so far, but some are dealing better than most. And I definitely put Cosaic into that category. But tell us a little bit about, before we get into all of that and find out how you've been navigating it and all of the challenges and successes so far, can you give us a little bit of background about yourself, Dan, and the company?
Sure, absolutely. So I'm one of the two co-founders of the firm and currently the CEO. I started the business about eight and a half years ago. I've been in enterprise software more generally for about 20 years, mostly from a kind of product management background. And just really, for whatever reason, passionate about building software. And so for the past eight and a half years, my co-founder and I have been building Cosaic. We were formerly known as ChartIQ, which is one of our products. We rebranded the company as Cosaic as we've become a multi-product company focused on the needs of cap markets. So we have ChartIQ, our data visualization product, and we have Finsample, our desktop interoperability platform. And really trying to help cap markets move into kind of the modern era of software development and bringing the best of web technologies to what has been kind of historically a little bit of a laggard in the world of technology adoption. So it's been a fun few years, and looking forward to a fun few more ahead.
It certainly sounds it. And look, you're in a couple of the areas that are on the tip of everyone's tongue at the moment. It seems everyone I'm talking to is talking about workflows and desktop interoperability. We're hearing a lot about data visualization and everything there, particularly with the current climate. And we'll come on to all of those in a minute. I actually want to start on something you just mentioned there about your background. So you came through from a product management background. And one of the things I've seen recently is more and more founders who have come from exactly that sort of place. So we're seeing a lot of product managers who are moving into sort of founding and founding backgrounds. I think traditionally, if you look at it, there are two schools of two camps in play. We've got the pure technologists who are passionate technologists, and there are there's loads of those who create products that never get anywhere, but there's some that make absolute genius products from it. And then we're seeing a lot of people come from business and particularly in capital markets, trading backgrounds, who then bring teams with them to create that product off their vision. Product management seems to be very much a third sort of stream to that at the moment, where we're seeing more and more product managers who are doing exactly what they've done traditionally, but creating different solutions. And I think it's a really interesting background to come from. How's that helped you so far, and what was the journey?
Yeah, it's a great point, actually. I love being a product manager. It was definitely, I spent the bulk of my career doing that. And it's funny, in product management, it's often referred to as the CEO of the product. Yeah. And it's kind of a bit of an inside joke in that, you're kind of responsible for everything, but have no authority. And so product managers often kind of roll their eyes at this kind of being the CEO of the product, because you're like, okay, well, that's great, but I have literally zero direct reports, and I have to rely on everybody else, engineering, sales, marketing, finance, etc. But I don't have any authority to tell them what to do. And then I actually became a CEO, and I realized it's the exact same thing. It's all the responsibility and surprisingly little authority. And so I think product management and that experience positions you well for it, because you basically have to sell people on your vision and get them to buy into it. And instead of being able to kind of manage with authority or with hierarchy, you have to manage with kind of a shared vision and driving people towards something. And so that has served me well, whether it's out fundraising and trying to get investors on board with the vision, trying to recruit employees, trying to get people, driving projects or whatever it is. So I think it's a fantastic background and great experience for people that eventually want to go start their own company to do a tour of duty as a product manager.
You touched on something interesting there as well, because I know some of your investors and I also know some of their criteria, which is always about the people. So it's kudos to you and the team that they I know they are very, very keen on the founders and having the right people with the right vision in there. You also mentioned there about touching on selling the vision and bringing people on board. Now, that's never been more important than today. You know, we're in such uncharted waters that leadership takes a real predominant role in what we're doing. You have a business that's in Virginia, but also in London and New York and Hong Kong. Tell us about some of the challenges you faced with that over the pandemic, and you know, as you said before, living out of a suitcase, but now not necessarily doing the same. How have you managed to have that same sort of ability to tell the story, to keep the vision, to you know, have you been growing the team, or have you consolidated the team, and how have you kept those employees engaged in the story and the vision of where you're going?
Yeah, I mean, it's been a challenging year for everyone, and I certainly consider myself and my family, my employees, quite lucky. You know, we've done well from a you know, health and sanity standpoint, but it has been a tough business climate. And you know, to your point, as the CEO, a lot of the job is basically traveling from place to place, telling the story over and over again, getting people to believe in it and buy into it. And it also evolves throughout that, right? You learn as you deliver the story to customers and to prospective customers and investors and employees, and you get that feedback and understanding of what resonates and how. And that is, it's a virtuous feedback cycle. And so pre-COVID, you know, I would spend the majority of my time traveling from Virginia to New York to Hong Kong to London, and spending face-to-face time with my employees and getting a better sense of what's happening out in the field by being able to go and either, you know, meetings or go out for pints or whatever it is, but also meeting with customers, meeting with prospects, meeting with investors, and just the repetition and that feedback loop. And you know, being here, working from my home office every day, and I haven't been on the road since February, you do miss a lot of that, and you have to find new ways to do it. You know, at a very simple level, when I would schedule a week in London, my team in London would know to use that as an excuse to book up a week of meetings. Hey, our CEO's coming to town, and they would use that as an excuse, and we throw, you know, networking events and that kind of stuff. Without that, they kind of forget about me, and I don't want to forget about them. And so even just reminding them, like, hey, you know, schedule me in for client calls. Let's organize a small client event, drinks over Zoom or whatever it is, and reminding them that I'm still available and doing more one-on-ones with them, where I might have normally said, hey, let's go out for lunch while I'm in town and do a one-on-one with each of the employees in an office. I need to make time for that now.
Yeah.
So that's been really important. The other thing, we a couple of years ago started a tradition of doing all hands meetings once a week, which in companies I worked with in the past, it was once a quarter you had an all hands meeting, maybe once a month. We started this once a week thing, and to be honest, it felt like a lot to me, right? Like, do people really want to talk once a week, the whole company, and taking an hour out of their day and coordinating across time zones? The feedback during the pandemic has been people want more, not less. We almost switched back to every other week, and the feedback from employees was no. Like, that's the 1 week I get to see everybody on little Zoom tiles. And it's not just me presenting, we rotate through and people present to what's happening in their department. We have an open forum for, you know, hard-hitting questions, for shout outs and accolades. And it's really become the highlight of my week, and I think it's become the highlight of a lot of people's week. And so just creating those opportunities where it kind of used to happen by default, and now you have to do it explicitly.
So it's interesting, isn't it, about managing to find the time for people? And I think in a perverse way in international teams, you've almost had more contact, you know, with the team as a whole from it, which you kind of testify to there. How many people have you got internationally now?
Well, in total, we're about 65 employees, and probably 12 of those are outside the US.
Yeah, so it is a difficult sort of play, isn't it, to get around everyone in that sort of thing and find the time to do that and give people that quality time as well. What sort of tips and tricks can you share on that, and what's worked really well for you?
Well, one thing I would say, we actually started doing last fall, we just redid last month, is using an engagement survey platform, which sounds kind of silly. And I have to admit, I personally was extremely skeptical when we decided to try it in November of last year. We're using a platform called Culture Amp, and I've no affiliation or reason to endorse, but it's a quick survey. I answer it just like everybody else does. It takes probably 5 minutes. It asks you a whole bunch of questions on kind of a Likert scale, and you can put in comments. It's all anonymous. And then the management team, and we end up sharing it with the company, gets this incredibly rich data set. And we can slice and dice it by demographics. It won't let you break it down into too small of groups, so you can't identify, I can't say just, a tiny little sliver, but it's allowed us to identify trends and unspoken needs, and to identify hotspots where there are certain geographies, certain teams, certain departments that are having very specific challenges, and it's helped us dive into some of that. And so that's fresh in my head because we've just been through that process in the past few weeks. But if you've never tried doing an engagement survey like that, I highly recommend it. You might get an eye roll or two in the beginning, but then I go through, there were hundreds of comments left by the employees. I read through every one. The whole executive team reads through every comment. We discuss them. We talk with the team leads about the results of their department, and then we share at the company level all of the data in one of our weekly all hands meeting as a measure of transparency back to the company.
And have you seen real change come from some of those comments that have come through from it?
Absolutely. Some of the questions or comments that come through end up being really small tactical items. They're easy to address and they're quick wins. Some of them are bigger, more existential things. But there are certain things that have come out of that around, how we operate, how we hold meetings, how we allocate time and resources, where we need to make changes in not management structure, but kind of management philosophy. So we have a number of team leads that are kind of young in their management careers, and it's been an opportunity to provide coaching where their teams aren't feeling that they're getting enough feedback or enough one-on-ones or enough kind of motivation as a group. And I think specifically in this time of COVID, it's highlighted what we assumed, but we needed to have kind of put in front of our face around people feeling the lack of social connection, and that we really need to be investing time into, social activities that we used to do in person. I was asking you about your awards on the back of your desk there. You were talking about your company Olympics. That's a perfect example of that kind of thing, right? It's silly, it's fun. Maybe, employees do a picnic and they bring their kids or whatever it is, and you have the different Olympics and awards. How do you do that in COVID? And for lack of it, the employees that haven't been with you long enough to have been at one, or haven't gone out with their colleagues in 6 or 9 months, how do you create those kinds of opportunities?
Yeah.
So we've had some real results, and it's been interesting to watch individuals in the company step up and want to raise their hand and take on some of those initiatives.
I think I'm fascinated. This is a subject which I could speak about for hours, because we're literally today launching the what we call the Ultimate FinTech Workplace Awards, and it's the 3rd year of it now. And we're looking for companies who I think have really excelled in this over the course, because I don't think there's ever been a more important year to get this right and to provide the right sort of circumstance when people are disconnected like that, of how you keep that connection and keep that culture and keep everything in there. And I think we're going to find some fascinating innovation, thoughts, creativity, and exactly what you're talking about there. But the one thing I really noticed from what you said there was I think you said some of the unspoken needs was the word you used, and I think that is when you're speaking to people on screens and you're having that time with people and it's an all hands meeting. You can sit, you try and read the faces. It's so difficult, isn't it, to see what's being said and then what happens in the WhatsApp groups afterwards or whatever it may be. And I think it's a really, really interesting point to see how people are taking that and listening to their, to customers, to their internal teams, rather than their customers, and trying to create the best possible solution to it. I think you've got a really interesting thing as well, because you're not unique to having offices in London, New York, and Hong Kong, but you're certainly in a situation there where we've seen, COVID aside, we've seen enormous volatility politically and socially in all 3 of those areas. What's that led to you? Have you dealt with that? Because this is, you can write books on all this sort of stuff, can't you? But at the end of this, with what you have learned over the last year.
Yeah, it's been I think interesting might be a bit of an understatement, and we're headquartered in Virginia, which you mentioned at the beginning. We're actually headquartered in Charlottesville, Virginia, which is a small, generally sleepy college town that became international news itself about 2 years ago.
Yeah.
So if you don't remember, Google Charlottesville and you'll find out. So it's been challenging, to say the least. I think, when we you mentioned our investors, and our lead investor for our Series A was Illuminate Financial, based in London. They invested in the business back in 2016. We were one of their first investments, and at that time, we were US only. We had a lot of customers overseas, but we didn't have any employees overseas. So it was all, telephone, email, Skype, or flying over to meet them. And we wanted to expand into Europe, and at that time, the UK was still considered part of Europe. And so we wanted to expand, and we brought in Illuminate, and Mark Beast and Mark Whitcroft have been fantastic, and I know you know those guys, and Mark Roderick's their third partner in New York that they brought on. But at that same time is when we opened our London office. And so we actually relocated one of our US employees, he and his wife, moved to London and actually worked out of the Illuminate office for the better part of about 2 years. And not only did they provide him with a desk, which was very nice because, London office space is expensive, but they really helped get him bootstrapped into the London network. And then we very much did a similar thing when we expanded into Hong Kong. We had brought in Ron Savino and the Asia FinTech Angels as investors out of Hong Kong and Singapore, and helped us establish a network there. We did the FinTech Innovation Lab through Accenture in Hong Kong. So I lived there for a few months, and then we relocated an employee we've since hired locally as well. And we picked those places because they were cap markets hubs, obviously, but also they were stable home bases, right? They were the place where you know how to establish a legal entity, and you've got a stable government, and you've got a major airport that you can travel in and out of easily to all the other areas in the region. And obviously that's all collapsed. And New York, which we built up as our North America hub, obviously all had to shut down. And so that has made it very difficult. And part of that's been coronavirus, but each of these places has also had its own kind of political and macroeconomic headwinds, to say the least. And without kind of commenting on the politics of each of those regions, I think it really does highlight for all of us how much stability matters. And that, sure, we picked Hong Kong instead of, Saigon or Bangkok, because it was a capital markets hub, but also because it was a stable business environment. And I think our leaders are kind of losing sight of that, and COVID aside, making it a lot more difficult to do business in those regions. And we're hearing feedback from customers, specifically in parts of Asia, they'll go unmentioned, that they're having difficulty justifying doing business with American companies.
Right.
So, and we're hearing it rather explicitly, not just undertones of it, but quite literally, we've been told by management, like, I can't bring a contract to management to do a big deal with an American company. And so, what's happening in the White House or what's happening on Downing Street is having an impact in our businesses, for sure.
So tell me about, like I said, we've had challenging tailwinds, both economically and socially, and everything that's gone on with that. But you guys are still having a good year, from what I understand. Tell us a little bit about how you've navigated that and why you're doing so well.
Yeah, no, it's a great point. I mean, it's been a challenging year, to say the least, all around. But we're growing, and we're growing really well. We're having a great year. We brought in some incredible clients. We've had incredible renewal rates. Obviously, immediately after COVID hit, we had some small startups and small customers that kind of shut up, closed the doors. But what we're finding is that, especially in our larger customers in both the buy side and the sell side and in big retail brokers, their developers are working from home now. Everybody's a lot more efficient. They have more time to actually take on projects. And honestly, trading floors working from home, or not being able to go into the office or not being able to travel has accelerated digital transformation in a way that you would not have. I mean, it makes sense in hindsight, but we didn't predict it ahead of time, right? I mean, you only have to look at Zoom's stock price to understand how much, right? It was unthinkable. We couldn't use Zoom to talk to a bank. You had to use WebEx.
Yeah.
Now I can do a Google Hangout with people inside a tier 1 financial institution.
Yeah.
So you brought up earlier in the conversation, desktop interoperability and workflows. Well, if I'm on a trading floor with 9 monitors and nothing ever moves or changes, and I can set everything the way that I want it, I've got a bunch of old legacy technology, I might not be that worried about optimizing all of that. When suddenly I need to be able to work from home with a laptop and an extra monitor and be able to do it over a VPN, I need things to be streamlined. And so I think that shift and that rapid acceleration of digital transformation has helped us and provided a lot of open opportunity.
I want to touch on that, and because it is something that comes up to me time and time again at the moment when I'm speaking to people. It's as you say, because of the situation having accelerated things, there is so much legacy technology out there, and it's been an inhibitor for so many years. This is how it is. It's too expensive to rip out. You can't just do that. But I think this has been the year of collaboration, where we're seeing people sort of recognise the opportunities on that. And you mentioned it, efficiency in terms of working from home, but the efficiency that people are doing from this accelerated digital transformation has had a seismic effect on everything. You guys are adding real value with your products, particularly around desktop interoperability. Easy for me to say, desktop interoperability. Tell us about how you guys are solving that problem and what sort of value you're adding to your customers at the moment, because I think this is really interesting.
Yeah, so desktop interop, which is a little bit easier to say. Interoperability is a tough word. It's a mouthful. Desktop interop, I guess I'll pause and just kind of define it for viewers that might not be as familiar with it. But if you think about your desktop and you've got a bunch of applications, some of those are built in-house by your own development teams. Some of those are third-party vendor technology. Some of those are in a web browser tab, right? They're built in modern web tech. And some of those are installed software. They're built in .NET or Java or C++. So that's quite a mix. And none of those things were, generally speaking, designed to work together. Yeah. So I switch between browser tabs, and by security design, my Facebook tab can't talk with my online banking tab. That's how you want it, right? That makes sense for Facebook and online banking. I don't trust either of them. But when I'm on my desktop trying to do work, I want my applications to talk to each other. If I do something in application A, I want it to update in application B. If I click on something, I want it to update. If I pull up a record in one, I want it to pre-populate the fields in the other. Yeah. If I log into one, I want it to log into the other. I don't want to have to do everything and copy and paste and rekey from system to system. So desktop interoperability as a category is trying to solve for that. Our product is called Finsamble. We like to call it a smart desktop, which I honestly think is a little bit easier to say than desktop interoperability. It hasn't caught on quite as much. But basically taking all of those applications, regardless of 15 or 20 years old and built in C++, along with the latest fintech thing that's delivered through a web browser, and making them talk in ways they weren't ever designed to. We've had a couple of patents issued on the technology itself. To the user, it's not replacing any of the applications. It's not putting a skin on them and trying to build a new UI on top of everything. It's literally just, I have my Bloomberg terminal right here. I click on a row in my security worksheet, and my order management system updates and fills in all of the ticket entry for that security. I'm in my CRM system, and I click on a contact, and it filters my trade plotter to show me all of the trades I've done with that person, and maybe tease up my telephone system to call them with the press of a button. So it's just pretty simple things, but it streamlines workflow, which basically increases efficiency and effectiveness, but also reduces error rates. Because when people are rekeying things, we always hear about the the fat finger, added, bought 1 billion shares instead of 1 million or whatever it is. But the reality is that errors and mistakes are quite common. Most of them don't have a huge impact, but they do tie up the middle office, fix and trade breaks. They do cause us to go back and redo work. And so we're able to really reduce those as well.
So this is really interesting for me, because there was so much money spent on with specifically around FPGA and the race to zero latency and everything around there, and that was the buzz, right? Zero latency and low latency trading and everything around there. Yet there were still massive inefficiencies happening in exactly what you've just been talking about. That switch, do you think would have been? Do you think that would have happened? I say switch. That sort of focus, back to Interop and such like. Do you think that would have been such a would have happened if it hadn't been for all of this? Or
yeah, it's a good question. I mean, on the latency side of things and FPGAs and how long is an Ethernet cable on the exchange floor, all of that kind of arbing out of those inefficiencies was going to happen no matter what. I think that even pre-COVID, the focus on the decision making and the fact that inside your head is a supercomputer that behaves differently than an FPGA or anything else, and we need to get the most out of that. And whether that's emerging markets, fixed income, sales trader, or whoever it is, right? We need to get the most out of the people that we can. We want to be maximized ourselves, right? As just going about my day-to-day businesses as CEO of a little tech company, I don't want to be rekeying a bunch of things. I don't want to be futzing around with formatting in Microsoft Word. I just want to get my job done. And so I think that was inevitable. I think that COVID certainly accelerated it, just because efficiency and became so much of a mantra. I think you kind of touched on something that I think is an irony of this whole movement, is that for 20 some odd years, we've invested so much money in software, right? I have no idea. I'm sure there's a Gartner analyst somewhere that could tell you how many billions have been invested in technology and cap markets. But honestly, we've built a piece of software to solve every problem.
Yeah.
The problem is we've built a piece of software to solve every problem, and none of them talk to each other.
Yeah.
So I've got too many applications. We've done a disservice to our users by building too many things. And each team that built a specific app for the equity derivatives team to calculate some risk, thing that's way over my head from a math standpoint, they built a thing just to solve that little problem. And you replicate that across the entire industry, and we've got application overload. And the alternative to that has been go all in with one vendor. Do everything with Thomson Reuters or with Bloomberg or with Ion or whoever. And nothing, we have great relationships with all those firms, but no one is great at everything. No application does everything. And I think what we've seen in kind of fintech has been an explosion of applications that are the best at one thing. So the question is, how do I deliver an integrated, seamless experience to my users, but made up of the individual components that do their job the best?
So do you think that sort of points to further collaboration and consolidation of the sector? I mean, we've seen the big boys being more and more acquisitive, over the years, and I'm looking, specifically at IONs and IHSs and in companies like that in the space. From what you're saying there and saying, right, okay, go to one, and I suppose, Reuters is Thomson Reuters and Refinitiv, to the same extent, Bloomberg to an extent. When you're looking at that there, do you see that as being the future? Do you see more and more companies sort of, buying in and consolidating that sort of technology, or will it continue to be a really fragmented space?
I think you threw out two terms there. One was collaboration, and the second was consolidation. I actually want to tease those apart for a moment.
Yeah.
Because collaboration, absolutely. In fact, we're already seeing it. So in our little world of desktop interoperability, there's a set of standards called FDC3, which is the Financial Desktop something collaboration. FDC3. I know, I'm just giving you a hard time, but it's actually a standards body that lives inside FinUs, which is the Fintech Open Source Foundation, which is supported by us as a vendor, but also all the big banks and buy sides. Yeah. And FDC3 establishes a set of standards for applications to communicate with each other. And it's very early days, but it's extremely promising because it's creating open standards for collaboration. So if you think about the early days of trading and the development of the FIX standards, right? So FIX really revolutionized electronic trading. Now, FIX did not solve every problem. It was bumpy along the way. It took a lot of years to get adopted, and it's still a bit fragmented. But if you try to imagine where the industry would be without FIX, you can't even picture it. And so that's actually happening in the world of application collaboration called FDC3. And the standards, they're just that, they're standards, they're not an implementation. You still need something like Finsample or one of our competitors to use them. But basically what they say is, hey, you're building an application that is the best at what it does. If you write to this one little standard API, when you're on a desktop that has other applications, you can communicate with each other. And so it's, again, kind of like FIX in that way. And so we're seeing collaboration happen. We're seeing collaboration happen through this open source community, which was honestly unthinkable, not 5 years ago. A bunch of banks contributing open source code to each other. Yeah. So I think we're in, I don't want to say a golden age, but a golden age of collaboration. The consolidation side is interesting. You mentioned, ION and IHS, who have been two very acquisitive companies, and I know some of the folks at each of them. They've done a great job there and built a lot of value. I think that's inevitable too. But honestly, that's driven more by the cost of capital and how flush private equity firms are, or all of that. I think that you're going to continue to see that, and I think that those guys are keeping their finger very much on the pulse of what's happening in kind of the fintech community and looking for those opportunities to start to pick up, the small young firms that have built some really interesting tech. But I think collaboration is absolutely happening, and I think consolidation is kind of inevitable. The downside to consolidation has been often a lack of choice for the buyers, but that collaboration, that allows you to start saying, hey, regardless of who owns this particular application, I can still make it talk with something else. So I think that's a really positive trend.
Yeah, I think that there's, as you say, there's definitely positives on both sides of it, but there's and I think certain companies have done really well to allow people to conduit through the through the great procurement issue as well to get into it. So certain companies, I think, have done a very good job on that over the years.
I would give a quick shout out to Bloomberg, and Bloomberg is not a company that you historically thought of as being super open and collaborative. Yeah. They do their thing, they're really good at it, but it's kind of a black box. We built a connector using what they call Terminal Connect, and they provide us with Bloomberg terminals and developer licenses and incredible support. So that we have an incredible Bloomberg integration inside Finsample. Yeah. So you can take a web application using the FDC3 standards, and Finsample will connect it to Bloomberg, and you can have bi-directional communication with the Bloomberg terminal. So when we start seeing firms like Bloomberg realize that opening up is to their advantage, I think it does mark a change in the industry.
Yeah, it's exciting. Dan, I told you to go quickly, and it has, but I want to finish off on one particular area as well, because, and this is something which we can have a whole show on, separately. But data visualization and post-trade analytics are two things that we're just hearing exploding at the moment. Particularly the post-trade is probably one of the most common things I'm hearing. As boom areas, at the moment, so much stuff going in there. I was really interested when we were talking beforehand about you talking about, taking all the data from MiFID II and delivering, business value from it. Tell us a little bit about how you're doing that, because I think that's fact. When people talk about data a lot, but when they're talking about delivering business value from it, it's seen as a necessary evil as opposed to sometimes a real profit driver. you're doing some interesting stuff with that with Charts IQ. Tell us a little bit about that.
Yeah, it's a great question. So, MiFID II kind of consumed our whole industry for a year or two there, and certainly consumed IT budgets and focus and attention from a technology standpoint. Whether you loved it or hated it, it happened, and it forced us to record and track a lot of information, and to do it down to sub 100 microsecond granularity on the timestamps, which means that we suddenly have this wealth of information that a regulator can come in and request, and you've got in a database somewhere. Great, you check the box, you've met compliance, the regulators are happy. What hadn't happened after that is creative uses of that data. And so what we've been doing with Chart IQ is to do trade reconstruction, either post-trade or actually in trade, as orders are being executed live in the market, to be able to visually reconstruct not only the trade, the market conditions that it's happening in, and then the external factors that are happening in the same timeline, and be able to deliver that as feedback, even if it's being executed by an algo and it's a black box. Now you can see into the black box. And the trader sitting on the desk can actually see the impact that the order is or is not having on the market. They can see whether or not the agency broker that they're working with that promises midpoint or better is actually delivering against that. And they can see it in real time. And so it's taking the data sets that were collected purely to check a compliance checkbox and being able to deliver that back to traders, quants, research analysts, et cetera, and be able to show them what's actually happening from a microstructure standpoint when their order gets executed. So it's been a lot of fun, which sounds weird, but it has been, to be able to help these companies unlock the value in this data that they invested heavily into, but to actually start to get business value out of it.
And I think that's sort of, to me, the key of everything you guys are doing right at the moment. Sort of looking at the customer and saying, how can we add the most value to to them, both through the desktop side and then through to the general visualization and data and everything you're talking about there. It's no surprise to me that the business is going well. But what I also love behind that is how you're looking at the team and everything you said at the start there about how you're looking into it. Because a good team and a good, well looked after team drives great results, and I think you guys are absolutely getting that nailed on. So people who are watching this and want to get in touch with you and find out more about the team, the products, and everything in between, how best to do that, Dan?
Yeah, so you can go to our website. It's Cosaic.io. Hopefully we'll link to it on the LinkedIn post where you're seeing this video. But Cosaic.io. Reach out, you can get a hold of me. I'm simply Dan at Cosaic.io if you want to email me directly, and certainly love to chat or set you up with somebody on our team to chat.
Perfect. Well, Dan, listen, it's been great hearing about the story. Great to hear you guys are doing well, and thank you so much for joining us today.
Absolutely. Thank you so much for having me. It's been a pleasure.
It's been my pleasure. Thank you all for watching, and we'll see you soon on another episode of Fintech Focus TV. Thanks a lot.